Stock market up again. That's great, but what are we smoking? Is ScoMo starting to suck up to the Beijing bad boys? And what two stocks could benefit? And what is the quality company Red Hot Ricard likes this week? I'm Peter Switzer.
I'm Paul Ricard.
And we're mad about money. Paul, I love the market going up.
Well, go you little banks, eh?
Go you little... Yeah, so...
Where have they been all year?
Yeah. But what's driving it, Paul? Like, apart from the fact that vaccine news is great, opening borders in Queensland, that's great, but is it something bigger than that?
Look, it's a little more than that, Peter. The economy is going gangbusters. I mean, there's been so much money floating around. We're seeing it in the banks in terms of what they're saying about deferrals, how quickly they're coming down. We're seeing in the retail sales numbers.
All the economic data is good.
We're seeing in the confidence numbers. We're seeing in the unemployment numbers. Now we have vaccines on top of that. A local vaccine too. Go your little CSL can help manufacture it. And the races are back on, right? The horses are racing, right? Something like that. Whatever.
And banks, of course, are critically important to the overall index.
Banks have been a huge part of the driver, Peter, and unloved for so long, and down from they were struggling in the 15s. Now I wrote a couple of months ago, could they get back through $20? They're all back through 20. NAB and ANZ up in the 23s today. Can they get back to $25? Yeah. So it's been a really quick recovery in banking.
And also, Paul, if the economy is recovering quicker than expected, the hard work the banks have to do to make it work is less, and the dividends are more on the horizon than they were, say, 6 months ago.
Yeah, you're right, Peter. And of course, the APRA guidance, which was only to round statutory profit and to only pay 50% of statutory profit, we think that's going to end. Yeah. Also, statutory profit rather than cash profit. Cash profits are going to be higher next year than statutory. Statutory profits won't be impacted to the same extent they have this year by write-offs. So, look, that means dividends will be higher next year. People like ANZ and NAB paid 60 cents this year. I think we're going to see around the 90s next year. CBA will get back up towards the $4 mark. So, look, dividends are going to be a lot higher next year than last year and higher again in 2022.
It's the Frydenberg rally we had to have. Now, is ScoMo, I love the fact that he said something today which kind of implied that he's not basically deputy dog for Donald Trump and the US around the Asia Pacific. And it just seemed to me he's trying to open up the door for a bit of negotiation with those bad boys from Beijing who are hitting a lot of our stocks and a lot of our commodities.
Yeah, I mean, it's a fairly conciliatory statement. We're not anyone's sort of
deputy dog.
Deputy dog.
Use that word, but kind of.
Yeah, and the same day that Biden's come out with some pretty conciliatory picks for for his key positions. Secretary of State looks like a negotiator. We're going to have more multilateral discussions, I guess. It's going to be a very different type of presidency than not as much fun as Donald. I think Biden's going to be a bit boring, right? And I think you and I and others are going to have a lot of trouble with this. But
we'll make up our own comedy now, won't we?
We will, but it's going to be very different under Biden, and I think that's another reason why the market's responding to that, Peter.
The two stocks is one that you like. Well, I like that one as well, but I like Treasury Wine Estates, and it's been belted up by China. I think if our negotiations get better, China will go nice on TWE. It'll go up, and you like A2 milk.
Well, I like A2 milk. I think it's going to take a while, A2 milk, because a little bit of a mini downgrade the other day at its AGM, Peter. Look, it really needs the Chinese tourists and others to come back a little bit, but I still think it's making good headway in the China. It is a New Zealand stock, so maybe not caught up by the shenanigans going on here. But look, it's a good company, so I think it'll come back. The other one, I think...
These are both Buffett companies, aren't they?
The other one that's really been left behind in this rally is JB Hi-Fi. I mean, people couldn't get it...
You're jumping the gun. That's the Red Hot Ricard one. Ring the bell, ring the bell.
Look, I'm a huge JB Hi-Fi fan. People couldn't get enough of it a couple of months ago. It was $52, $53.
What's it now?
It's back at $46 and the market's rallied. Yeah. It's all because it's in this rotation trade. But Peter, doesn't matter what's happening to the economy, people are going to keep on buying electrical things. There's going to be a lot of money spent on home furnishings. But the big change here is people aren't going to travel overseas. Spend a lot for a long time, spend a lot more domestically. Yeah. And people like great retailers like JB Hi-Fi, Harvey Norman, they're going to benefit. Record low interest rates, all that money going into first homes at the moment. That's got to be good for things like the good guys that they own. So I think you're looking for a stock that's been left behind in the rally, more so because it's been caught out in the so-called rotation trade. JB Hi-Fi is the way.
And it's kind of what I would call a Buffett company. It's solid, it's the best of breed in the country, and their online business has improved during the lockdown. Yeah, and you're absolutely right. If people are looking for a quality company for the future, JB Hi-Fi is the one. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
Shh.